Yeah, hi everybody. It's still Friday the 21st of August. It's just after 10 o'clock in the evening. And I had to get on and post this little snip because I've just read an article in the Irish Times and I'm staggered at what I've read. And it's written by their senior economics correspondent, a man called Arthur Beasley. And what it says, basically, I'm going to post it up for you so you can have a read of it. It basically says NAMA may acquire up to 40 billion euros worth of derivatives. Now what you have to do is you have to think about that, and what I'm going to do is, as I say, I'm going to post the thing first of all. Then what I'm going to do is, just before we discuss any more of it, I'm going to read what the Western world's #1 capitalist, a man called Warren Buffett, what he has to say about derivatives. And this is taken from the accounts of Berkshire Hathaway, which he controls, its company, from 2002. And it only lasts 2 paragraphs, and it gives you an insight into what he thinks of derivatives. I view derivatives as time bombs, both for the parties that deal in them and the economic system. Basically, these instruments call for money to change hands at some future date, with the amount to be determined by one or more reference items, such as interest rates, stock prices, or currency values. For example, if you are either long or short on an S&P 500 futures contract, you are party to a very simple derivatives transaction, with your gain or loss derived from movements in the index. Derivatives contracts are varying duration, running sometimes to 20 or more years, and their value is often tied to several variables. I won't go on because it gets quite complex after that. But basically what Buffett is saying is that derivatives, and these derivatives that we're talking about here, these derivatives that these banks hold, are probably in the main property derivatives. And if they had any value at all, those banks would be selling those. And they don't have any value because the derivatives that they're holding are all based on one premise, and one premise only. And that is property prices would continue to rise. And this is a recipe for disaster. We're talking about for buying pieces of paper, and we are going to take on the paper value of them is 40 billion euros. God only knows what the ultimate value of these things will be. These are all leveraged. These are all leveraged against future things that we have no control over, such as interest rates, the equity markets, various other markets. This is like, as Buffett said, this is a time bomb. We're a tiny little nation of 4.2 million people, and our bankers, the so-called bankers that we have, the banksters that we have engaged. This is total and utter gambling on a huge scale with our country. And we are the ones that are being asked to pick up the fallout from it, not the banks. This is private indebtedness on a massive, massive scale. And yet again, we are going to be the ones. This is not property. This is bits of paper. This is gambling. This is gambling on what way markets are going to go. And if these, as I say, if these had any merit, any value, if these people who bought these derivatives had bought derivatives that were based on the market going down, they'd be able to sell them today for huge amounts of money. They wouldn't want NAMA to be buying them. This is just so frustrating and so unbelievable. And this is the senior economist within the Irish Times. This is no little girl, age 25. This man is flying this kite because he knows within a month or two we're going to be doing this. When this NAMA thing becomes law, this is what's going to be hitting us. Forget about the 90 billion that they're talking about for the property loans. What about another 40 billion on top of this? Anyway, we'll talk more about this. It's so frustrating and it's just unbelievable. Anyway.